Good morning, traders. We write Monday, 2nd of March, 2026. Welcome to another Flow Show. Ryan is not with us today, but he will be on Face a bit later. I think he had some personal business to take care of. So without delay, let's dive into what is happening and what may happen, which is probably for us traders going to be the most important. We all know, you've all seen the news. We've all getting bombarded with, oh, I should maybe not bombarded is maybe not the right word in this situation, but we get the headline overload. I will come to that back, obviously. But first of all, let's run through another few less dramatic headlines, although there aren't that many that came out of the weekend, obviously, because every headline that we had so far is linked to the Iran Middle East situation. But anyway, there's been just a few other headlines and maybe some data to look at. Have a quick look at the calendar as well before we come back to the to what is really keeping the markets in its grip right now. Um, One thing that was in Japan, we had the Bank of Japan deputy BOJer coming out saying that the policy over at the BOJ remains somewhat accommodative. Obviously, must watch markets carefully, not or avoid rather being swayed by speculators. He repeated that rates should be hiked if the economic outlook is met, but that many in Japan are not yet having the view that the economy is particularly strong. So that, I'm not saying closes the door on March, but together with probably the events today as well. But um, he doesn't seem to be fully on board yet with March, so maybe that still keeps rather April on the table than March. Um, Elsewhere, yeah, we had an interesting article speaking about timing by ECB's Nagel over the weekend. I think it was on Saturday or so, where he came out and basically the main line in there was that he said that he has doubts on the dollar safe haven, or he said rather that doubts on the dollar safe haven status have risen. It's kind of in line with what Lagarde was already saying. Those people don't seem too worried about in general. In general, I mean the events over the weekend and what's going on right now, taken outside of all this, don't seem too much or worried if the market would possibly dive a little bit more into euro. And he said on in this article, he said that for the time being, the dollar weakness is set to remain as international investors' loss in confidence could well persist. So he's that was one of his lines that he came out with over the weekend. For the rest, he said ECB is still in a good place. Expect inflation to stay around 2% for the foreseeable future. So there's nothing really new in there. But I found it an interesting line in regards to the dollar safe haven status, which we have already verified. He's saying over the weekend, but there may be other factors at play there than just a safe haven status. And I will obviously come to back to that a bit later. We also had the Norges Bank Barcard saying that their job on inflation is not yet done, and I'll have a look. Oh yeah, but I will need to change my charts a bit because we have an issue with some of the chart update this morning. I will, to the best that I can, navigate the most possible pairs and instruments, but some of them are looking a little bit wonky because some prices have not been updated. But anyway, the Norges Bank is not yet on the dovish side of things. Um, Norwegian krona has done well, but we also know that Norway is an energy exporter, so there is no big surprise that Norwegian kroner is one of those currencies that should be doing better in current scenario. We also had already a few data out. Last night, we had the Aussie manufacturing PMI out coming in at 51 versus the prior 51.5. Not too much of a surprise there. We also had European PMIs out this morning. The manufacturing PMI in Italy a little bit better. The final French and German February PMIs coming in also on the better side of expectations and the flash numbers that came out. And in from the UK, we had also the manufacturing PMI out coming in not that far from the expectation. So there's nothing really special going around there. Um, Mortgage approval staying somewhere around that same level as we have seen on the prior number. Credit data a little bit higher than what was expected. What else is on the docket for the rest of the week? Already today, we do have the um, S&P Global Manufacturing PMI out for the US and also in Canada, and we have the ISM manufacturing numbers out. Obviously, the early week data are going to be completely submerged in whatever happens in the Middle East. But still, I mean, they are data. They will be taken up in the money managers, asset managers, hedge funds, whatever data and models. So we have to keep an eye on them, obviously. We have a few Japanese data out later tonight. Then tomorrow we will have, before the next flow show, we will have the Aussie, couple of Aussie data out, and we also will have the preliminary Eurozone CPI data out, and that's going to be right ahead of tomorrow's flow show. So those are going to be a good indicator of whether Nagel, Lagarde, etc., most of the ECB members really think that inflation should be remaining around their 2% level, and then further down the week we will have a few, obviously in very quite a few interesting data points out. If there wouldn't have been the Middle East situation, it would have been a very interesting, actually, data week because we will have the services PMIs out. We will have the ISM services PMI out. Then later on Wednesday, we will have our usual claims productivity data out on Thursday out of the US. We will have the Eurozone retail sales out as well, and then on Friday, obviously, we have our employment situation out in the United States, which again is going to be one of those reports where the market is going to wonder, is it finally time that the US job market is going to show more weakness or not? The prior report, as we know, has defied the laws of gravity again, although we had pretty severe or serious revisions on the 2025 data, but the actual data remain pretty solid or okay, let's say. So that will be for Friday. But of course, the big one of the day is the Middle East, and Israel and the US started their attacks, as everybody know, on Iran. I'm going to spare all the details, all the headlines. As I said, they're coming out every 5 minutes, if that much. But basically, what's happening is that they went in, they targeted facilities, they targeted the Iranian leader. We have now, in the meantime, had confirmation that the main leader Khamenei has been eliminated. Part of his family as well. That the head of I think is the head of armies also. The other person has also been eliminated. We have seen, and those headlines came out not that long ago, that the Israeli and IDF said that they um, hit the what was it? The intelligence services as well in Iran. So there's a lot of targets have been hit. In the meantime, we've also seen and heard that the Hezbollah got involved. So now the Israeli strikes are widening into Lebanon, trying to hit the Hezbollah as well, and what happened on the defense or retaliation side is perhaps and we've always have to be extremely careful not to say anything that isn't true. But what took the markets maybe whoops, what am I doing here? Maybe by a bit by surprise is the widespread retaliation. Iran has said that they are targeting US and Israeli interests, but hitting targets that are not seen as purely military targets, whether it is in the zone just around the Strait of Hormuz, or a little bit further away. The problem is that they have been hitting as well other targets, like for instance the Dubai airport, Qatar, etc. And that's probably one of the reasons why we saw the moves that we saw this morning. Obviously, there's a bunch of tankers now, not oil tankers, not entering the Strait of Hormuz. They've been anchored somewhere around the entry or a bit further away, and that obviously has sent oil spiking quite hard over the course of the weekend and starting this week. I'm going to have a quick look at Brent here as well. And one of the other effects is that and I'm not sure that my bonds are pretty up to date here, but that we've seen also a drop, initial drop on in the global bond markets, and that has to do with the uncertainty for how long this Strait of Hormuz will be. Let's call it blocked. I mean, it's not a blockage. As such by any country, but seeing all the everything that's happening over there, it is quite normal that oil companies are not going to risk their shipments and personnel unnecessary to get oil out of the main hubs and then send around the globe. So that is one of the reasons why we saw a bit of bond selling going on this morning on the back of the markets being uncertain about the supply of oil that is going to for how long the supply of oil is going to be affected, which in turn could lead to some supply inflation, meaning that the yields could be dragged a bit up due to this inflation, and that's why the bonds really got hit a little bit. I'm just going actually to have a quick look at what's happening in the bond market. You can see here the UK gilts. They also, I'm just going to take this one as an example. UK gilts have been hit a little bit. The 10-year Germany has also been hit a little bit. So that is really reflecting what the impact the market thinks that an impact may be if we get issues on the supply zone in on the supply of oil in actually a lot of countries. I'm going to go back to what I was looking here, and so the effect, we can see here on oil, we've rallied close to 82 on the open, right on the open of the Brent. This is Brent, but since then, and I'm going to have to go on a tighter one here. Since then, and that's been noted in our room as well, since then, the prior high here, and to just go on to the 4 hours, the prior high here at around, no, that's not the one I'm looking for, this one here. The prior high here that we saw in June 2025 seems to act now as a level of close monitoring by oil traders, because we had a few attempts above again early in our session, but this level here around the 80 zone is seemingly acting as a bit of a resistance. So already this zone is going to be an interesting watch, okay, on Brent today. If you're looking at oil, if you're looking at all the headlines that may come out, if you see another spike, we're trading around 78.5 right now. So if you see other spikes around 80, 80.5, that is the first zone that you will need to observe on those oil spikes. And talking about those oil and oil reserves, we had some comments actually out from Japan's Takaichi overnight, saying she says that Japan has about 254 days worth of oil reserves. And so for the moment, it's not panic stations, because something other interesting that happened overnight and in our morning is yen. And we saw the dollar getting that trading that safe fish haven status. We have seen the dollar stronger versus most currencies, but people are wondering why the yen is not having this kind of or enjoying a kind of safe haven status that the Swiss may have. Well, the reason is that supply and that energy supply. Japan, for as long as they don't reopen more of their nuclear power plants, and I've been talking about it in our room last night already at the open, that is still an issue, because Japan is still a big energy importer. So that is, at least that's my take, that is one of the reasons, or the reason, why the Japanese yen is not doing better than what it's doing right now. So if you're looking for the explanation of the yen move, I think that is one of the reasons. But that also means that if we get like anywhere better news, also there is a chance that the yen may also do better. So don't only, or actually in this case, don't look at the yen as a risk on risk off currency, but just but rather wonder how supply in energy will be affected by all of this situation in the Middle East. Um, so that is about what was happening in the yen. If you look at levels here, I would say this prior high on the dollar yen could be an interesting one, and then I would rather look at levels maybe around 157.90, or a push in up in 158. And while I'm on the yen, just don't forget that those Japanese officials will still be watching what is happening on the yen. Okay, the yen index has been it was doing a bit better on Friday, but it's probably going to come off a little bit. Those people will still keep a close eye on it. So I think levels, if we continue to push through and we get to levels up above around here, 157, high 157, 158, just be careful for more comments or rate checks or whatever from the yen official, from the Japanese officials, okay? But for as long as the situation lasts, I would be a bit careful with short dollar yen or long yen, because the longer this situation lasts, the more they will eat in their oil reserves, etc. And we may actually see the yen continue to be to be a little bit on the weaker side of things. You are right, Dimi, also in noting the cloud. It's an extremely thin one that we have right now. So that means that it's easier to traverse. I would say for the cloud really to have a very big impact, we should have thicker ones where you can trade it a lot more. But if it's like extremely thin, some may say, yeah, if it's a thin cloud, if we get through, it's the move is more explosive. But I would rather think that I'd rather wait for it to come on to more serious levels. But and also, due to the situation, I'm not sure whether the people in on trading yen or at least the Japanese will be more worried about what's happening on a dollar yen cloud than rather what's happening in the Middle East and how their supply of oil is evolving. Okay. Um, okay, let's get back to a bit other headlines. And there's an interesting one that we need to watch here, and this is the long-term Swiss, because we did have finally a reaction by the S&P saying that in the view of the international situation, the S&P would be more prepared to intervene in FX, and we have seen Euro Swiss this morning, and I will just go back on the real short term. We have seen this morning, obviously, this is really the currency that trades with risk in FX land. Yes, we have a bit of impact on the sterling. Yes, we have a bit of impact on maybe mm, like for instance, Norwegian krona doing better there because of the oil. So that's maybe a different one to watch. But Swiss really has been the currency that has really traded in FX the most with risk. And obviously, risk off has driven Euro Swiss, which is a main barometer, has driven Euro Swiss quite a bit lower below those prior lows that we had over the past couple of years, and is now it hit around 90.20 this morning, but it's trading around 90.70 right now. So the S&P has been now sending real warnings into the market, and I guess that if we get anywhere closer to 90 again or so, we may indeed now see them starting to be more adamant on interventions. And Dimi, that is the reason why I'm showing different charts today, is that all those FXCM charts have been they have an issue on their updates. As you can see here, for instance, I haven't changed that one yet, but they don't have any, they don't update any of the charts on FXCM. Okay, if those are all who are on FXCM to watch charts, they are not updating right now. They have an issue there. Okay. Let's get back to the main movers on the news that we have out of the Middle East. Gold obviously rallied, and it's coming back a little bit. This level is just a line that I put in here. It's a little bit the underside of a gap open that we had when we raced up to the all-time highs, and a bit of a level on the back here as well. So that stopped around 54.20. It's only a small level. It's probably more coincidence than really a big level. But obviously, the metals, together with oil, have been the main movers, the main instruments on the move in these markets, which could have been expected. And I would really look at what's happening if we get back up to, let's say, 54.5, 54.65, when New York will walk in this afternoon. That's going to be a real zone of interest because it looks to be, to me, at least the gateway to get back to up to those all-time highs around 5,600, if that level would break. To the downside, retracements all headline driven as usual. In current situation, there's maybe a small interesting level around here at 53.45. There's potentially a more interesting one around 53, somewhere over 515. But I think the main one here that we have to look is that break that we had at the end of last week, and the gap opened this morning, of course. But rather than watching the gap, I would watch 52, 40, 50 again. If we get any headlines that would hint at the situation maybe doing a little bit better, then, and I'm just going to ask people in our room, has there been anything on sterling, for instance? Because I see cable rallying quite a bit, and euro sterling coming down, but I didn't have my squawk up, so I'm just calling a friend and see if there's if anyone has any headlines, or you guys here with me have any headlines on what's happening maybe in sterling, because sterling is doing pretty okay compared to other currencies right now. Okay, so as I was saying on gold, if we would get more positive headlines, but I think then the headlines would be really have to be more positive. Is that that 52, 40, 50, and then look at silver. Obviously, we've hit our head against a couple of a level here, a couple of times around 96. It's not a huge level for any means, but it's just halfway of the last ramp higher that we saw here before. But in the meantime, we've come already lower. But 96 looks to be um, the gateway to back to 99,102 on silver. It has capped. We are trading around 95. It is, yeah, capped a little bit here, but really it's been riding this train quite nicely for the silver longs. And I think really to think that we could come back down a little bit, we have to get back to through a zone here, 92.80, 93 to figure. That would be a start, but especially I would say anywhere between 91 and 90. That's going to be the first real level to watch on silver. If that goes, then we could have a bigger retracement down to 86. But in the current situation, the situation being fluid as it is, um, I would say that both silver and gold and probably the other metals, for as long as we don't see a resolution of the situation, that 86 should likely hold, right? The day that goes, it's probably we're probably in for a deeper correction. Okay. Back to oil, and then I haven't looked at WTI yet. Obviously, we had that big spike higher through the top end of the channel here around 70 to 70, and we stopped around 75. We're already trading quite a bit lower here. We're trading around 72 bucks right now. Um, and I would say again, this is now a case. I would say 70, 75 is really the zone, the area that we need to watch, because of the situation being what it is. Expect a lot of volatility, but I would say get a move above 75 and hold. We probably the market is going to look at 80 bucks. If in turn we get back below 70 and things quiet down, this party may be over again. In the meantime, and I'm just going to say this on the tip of my toes, because we have seen this since the start of the conflict in between US and the US invasion of Ukraine. By the way, there was a bit of a headline again out that the Ukrainian lines have still not changed. They would prefer a diplomatic solution, but we know the conditions for their diplomatic solution obviously is to gain territory. In the meantime, there have been drones flying over Ukraine again. There have been retaliation again. Some Russian oil refinery has been on fire as well. Putin came out, or Russian officials came out saying that he wants to talk to the Gulf states. So uh, uh, they're getting a little bit involved there as well. So this is not another thing that we need to watch. But anyway, as we have seen and as we have mentioned since the start of this conflict, we have seen those spikes. We have seen those spikes. We have seen those spikes, and yet the initial reaction, at least, is that we did not go above the prior spike highs. Yes, these are very very big moves, really very big moves. But the longer term picture, if you look at all those highs here, for as long as we don't get back above 77 and then targeting that 80, the longer term picture, we might have broken a line here. That's correct. But the longer term picture of lower highs has still to change. That is just something that I am keeping an eye on, because if it starts to reverse and we get back below 70, we may end up in a similar situation that we have seen here. But therefore, I think this time we need to see something better, because it is, after all, the Middle East. Strait of Hormuz, everybody knows, what is it, about 20% or so um, of all the oil supply in the globe is passing through that strait. So any prolonged um, closure or blockage, whatever, however you want to name it, of the Strait of Hormuz should have also perhaps a longer lasting impact on all things oil in the world. Okay, right. Looking at the other main currencies before we close. Euro dollar, we broke below that 117 38.40. There's a few reasons also, and I have to straight away say that the moves in FX, barring maybe that Swiss that had a bit of a yo-yo there, and dollar yen being a big figure higher. But I already mentioned about the US dollar. But now let's talk again about that supply. Don't forget that Europe is an energy importer, and actually US is an oil producer these days. Okay, or anything that is oil related, or LNG and whatever. So in that light, and I've already mentioned that for the yen, for instance, it's understandable that the euro came down quite a lot, but I still find it not overdone. So all FX moves, all in all, have been kind of contained so far. Okay, so the euro dollar stopped right on the 61.8 of the move higher that we saw from November into late January. We stopped on the 61.8, 117 the figure. That's the level that you will have to watch for today on the downside. If we get a retest and it bounces again, it may mean something. Okay, we get a break below, then I think we may be on our way, because that means that things are not um, getting solved. And I'm seeing now just on the headlines that Iran is appointing new ministers after some of them have been eliminated. So it doesn't seem that they are ready to give up so soon. But so we could have a bit more stress here. And if we get below 117, we may be on our way to 116.35, or maybe even closer to 116 the figure. But just note that level, and keep in mind that those moves in oil are going to have an effect on what's happening in stuff like euro dollar, are going to have an effect on what's happening in the yen, as I already mentioned. Okay, what's happened in the cable? So pretty decent job, but look at this trend line here that comes in at around 133.30. And then we also had here the 61.8 also coming in just below 133.40. And then we have the prior low here coming in at around 133.15. Cable stopped right in the zone. So 133.40 down to 133.15, even though it broke slightly below the trend line. Sorry, I would still take this 133.50 as a bit of a level because just the speed of potential moves that we are seeing. That may be the the real support is rather a zone than a point, okay, than a precise point. It's trading around 134 the figure, which is around here. This is already a pretty decent recovery because we saw euro sterling actually down roughly 30 pips now from the highs. So sterling is recovering better than the rest of the currencies right now. Again, I have failed to see a headline. I'm not really seeing what's going on there. It is maybe something came out on the Cyprus base. UK said that the base was still operational even after the drone attacks, but no, I haven't seen any fresh headlines at least. But sterling is recovering. Okay. So this is a support, and then watch 134, 40, 50 top side. Okay. If we start to get back above there, this whole scare may kind of be coming to an end. So I think for me, this 134, 40, 50 is going to be relatively important. Okay. Um, Aussie is also holding up, and I would say in a way surprisingly well. We have seen a drop like in all currencies. The oil, sorry, the US dollar doing a lot better. We saw pretty big drop at the start of the opening actually, but the opening has been the low of of the session, and we couldn't reach below those lows that we have seen here, which are from earlier in February, which to me is going to be another pretty decent zone on Aussie. And in the meantime, we're already back above the trend line that we had broken here as well, which it's little steep for my liking, and trend line coming to the market is not something that I usually fancy. So I'm really going to rather look at those levels than the trend line here. But we are back above, and dare I say with some comfort, and we're back around this well-trodden level. If we would get any better news, perhaps we can get back into that 71.35.50 zone, but for the time being, I'm rather looking at what's going to happen on that situation and the developments to see whether this zone here around 70.20 holds. Um, just a quick look, and I hope, yes. I hope. I was hoping on the S&P. And as the last one, and I'm going to look at for today, we had obviously an open which was quite a bit lower. But again, here we had the low was 67.60, which is really not far away from the trend line support here, and which is also 50% off the November into January rally. So this is really going to be the big level on the day on the S&P. In the meantime, we are trading back rather around this zone, around 68 the figure, which probably going to be a little bit of a hinge between what we are seeing here, 68, 25, 35. But if we start to get back above 68, 25, 35, then the dip bias will have the upper hand again. But it may be that to open the week for the S&P, We may see a little bit more of a recovery, but then a retest of this. So 67.60, guys, is the level to the downside. 68.30 up to 40, let's say, is the level to the top side to monitor once US will come to the market. So really, I would say trade safely more than more than aggressively if you want to trade it. And there's absolutely no shame of staying out of markets when you're in doubt, and let the events develop rather than trying to bet on what the events may be. And that's it for me for today. And I will see you on the Face Show for more in-depth analysis. Thank you for joining me, and we speak to each other in a few hours.